Hi guys, welcome to the webinar. Welcome to the second day of my 4-day free live trade execution webinar series. I'm always asked on these webinars, is this live? Is this real time? So while we're not looking at the markets real time because the markets have closed, this is a real time webinar. So I'll be analyzing the markets in real time. And my name again is Mark Shawson, the pattern trader. So yesterday I introduced myself and shared how I analyze moves in the market. It doesn't matter if it's in the crude oil market, oil, corn, wheat, gold, the euro versus the yen. I look at price action and price patterns to determine how to set up high value risk reward opportunities. And now I'm not talking about just darting in and out like a squirrel, darting in and out of a tree looking for nuts. I'm not looking to just snag 7 pips, every hour off a 15-minute chart with some kind of moving average, things of that nature. So I'm looking to take the middle out of big moves in the markets. I shared with you some of them. I've got some trades that are currently on from suggestions to our. So these are currently my my current positions in the market. I knew I got in early. I think the S&P still could go to 4,200. It's trading at about 40.80 right now. And I don't know why. I got in early. I bought these call options on this inverse ETF that goes up when the S&P goes down. And I'm taking a small loss in that. But, my big positions are in gold. So a couple of weeks ago, I sent out this email to our members. This was on Sunday, the 24th of April. So about 3 weeks ago, to sell gold at a price of $1,919. Currently it's trading in the market about $1,816. So gold has dropped $100 since I sent this email out. Now, if I'm looking for big setups, I look to hold these trades despite the fact that I'm making an enormous amount of money in it. So I had another order, a follow-up order on May 12th. To sell gold at a limit. I typically don't do this for certain reasons. And I got very lucky that day. Gold actually went to 1828. I had an 1827 limit, got filled, and now it's trading about 1816. So you can see that collectively, these positions are making me a lot of dough. I'm also long the pound versus New Zealand dollar trading pair, which I'll discuss today. And I'm also short silver, which I sent as an email to our members over the weekend to sell silver into a rally. Today we had a rally, I shorted into it, and we'll see how that goes. But whatever I do, it's exclusively based on what I'm looking at in the market. So last night, just to give you an indication of last night, this was my email to those on our elite member group. Now, our elite group gets an email from me every day updating, on high value things. If you're interested in the elite program, after this webinar series, you'll get a call or an email from our team alerting you how to register if you are interested. And, last night I said, while I said, while I feel like we're destined to see lower prices in the stock market, I also think we may see a continuance of the relief rally or dead cat bounce. And that's basically what we had today. I said, I think that there's still an impending big move lower in the S&P 500. And I believe we could decline to the 3,600. But again, I said, I think we could see a continuation of this relief rally or this dead cat bounce. And I'll kind of share with you what I mean by that. So this was my trade last night. We talked about it yesterday in Tesla. And so what I look at is, a certain setup on the chart. And I'll go to the live chart now and show you what I'm looking at. But even once I've set up my whole analysis, I require the market to confirm and put me in the market. So last night I sent out to enter a sell stop order in Tesla at $718. And as you can see today, Tesla went to a low of $728.85. So we never went down to that $718 low. And so despite the fact that I thought Tesla was going lower, the market didn't confirm. And so no harm, no foul. Even though Tesla went up today, I wasn't in. And so I require the market to confirm what I'm looking at. So with that said, let me just kind of throw Tesla up on here, and then I'll revisit, my trading rules at the same time. So this is the chart of Tesla, and I'm going to purposely just swing this to the right here so I can kind of put this up. So yesterday I shared with you my 4 rules for entering a market. This is an overseas call. Hang on one second. Gary, I'm on a webinar. I'm gonna call you in an hour. Bye-bye. Sorry about that. So these are my 4 rules for entering the market. So the first thing I do when I open up a chart is I say to myself, is this a market that's going up or going down? Now I should have a longer term chart, but basically back in November, this stock Tesla was $1,250 and now it's $750. So this has been kind of in a stealth bear market. This has been slowly chopping lower. So the phase of the condition of the market is slightly lower. A little bit deceptive because, it has been very sideways and, prone to get here and then go there. And so we could say, well, maybe we're at the bottom of a trading range and, about to go much higher. So once I determine what the phase of the condition is, then I look for what I call, are there any historical or governing chart patterns? And a governing chart pattern is basically a pattern that governs or dictates the price action going forward. And I think that there is a number of bearish price patterns in Tesla going all the way back to November, where we have this little double top there. You can see these 2 bars hit the same price, and then prices went lower. And it's actually a very stealthy looking head and shoulders. So head and shoulders is just what it sounds like. It looks like a man or woman's left shoulder. The peak is the head, and there's the right shoulder. So now we see this head and shoulders, this double top head and shoulders, all through this pattern with Tesla. So you kind of have this left shoulder here, the peak is the head, and then you have the right shoulder. And then you have the same double top head and shoulders right here. Then you have a double top and a head and shoulders right there. And then you have a double top and a head and shoulders right here. So all of these sit right around here, basically around the 975 level. That's where all of these share a similar neckline. Pretty interesting. And you can see, so to me, these are areas of what I call distribution. This is where the inside guys are bailing out. So basically, every time this thing hits, this area, there is just a ton of selling. And so by virtue of this down phase and these bear chart patterns, I think that Tesla is going to head lower. But, I require the market to confirm me. So we are in this area of support right now. Whenever you hit a common area, you usually find a little bit of support. When you get, such a big jump out of here, usually, the market can follow through. But to my mind, this is still what I call the governing chart pattern. This big top here and all the other tops, these to me tell me that on balance, while we, there's all kinds of times where, the market rallies, you can see that these are just what I call short covering rallies, what I call dead cat bounces, where they extend, but they don't extend too far. And so I do think that, yes, very possible Tesla could continue to jump out of here. But I also think there's also a very good possibility that it fails. And so, if I don't know, what I do is I just put a pending order. So I would put a sell stop and leave it right under yesterday's low at $718. And so if this thing continues up, fine. But if it backtracks and starts triggering that thing, you are likely to have a sharp fall. So, this is like kind of having your candy and eating it too, where you don't get hurt if the market goes against you. And I think if you get triggered, you are likely going to be in, a good position. So this is what I call an inside day bar. So just going through my rules again, I look for what is the phase or the condition of the market. So this is basically a downtrending market. Is there a governing chart pattern? Well, there are several. And then I look for what I call my insurance day bar. And this could be either a key reversal or an inside bar. And what I mean by an inside bar is that you can see today's range sits within the range of yesterday's bar. And what I look at is of an inside bar, I really don't care where it closes. I just look at it as a storing of energy, that this is just kind of, built this inside bar, and now it's going to explode one way or another. Now, this could explode higher, but again, I'm very reticent of chasing this for fear that, I could get knocked back here. And so I would basically just put a sell stop under, today's low at 728 or yesterday's low at 718 and leave it there. And so this is what is the last final step, is that I require the market to confirm what I'm looking at. So you can see that yesterday we had this kind of reversal and we have this inside bar and it looked like it was failing. And so I directed our members to put a sell stop pending order. So this is just a resting order right under the low. And you can see that today's low was way above there, never got triggered. And so the market went higher, but our members were never put into it because the market didn't confirm what I was looking at the time I was looking at it. Now, Tesla wants to go higher. And then I see, something like this where I see a key reversal. And I don't look at these reversals in a vacuum. I look at it consistent with the patterns and the direction. I see an inside bar, I see another reversal. Now I got another double top. Now this would tell me I'd put a sell stop here and look to take it that way. So this is a good example of seeing a setup, and yet ultimately, to me, the market is always right. I always want the market to confirm that my analysis, my analysis is purely subjective, purely delusional, and I want the market to confirm. So I either require, if I'm looking to buy a market, I put a buy stop above the inside day bar or above the key reversal, or in the event of a market that I'm looking to sell, I want to put a sell stop underneath the inside day bar or under the key reversal day bar. Are there any questions about that? So Bruce says, would you put a straddle on this? You could always do a lot of fancy stuff. So it's very possible that, you could have another move higher. There's a little gap here at 850 on Tesla. Very possible that, we go and take another look at that. So you could, look to, try and take this thing both ways. So as it breaks out of here, so I see that this is looking like it's kind of got this little triangle built here. And so, to me, it's energy, right? Markets are energy. So if it breaks out here, to my mind, this is my reticence right now. This is kind of what I said to our members last night, that, I think the market's going to go down, but it's entirely possible that we have this dead cat bounce. And what I'm looking at is this area on the S&P. And I think I talked about it yesterday. where my expectations are that we rally back to the breakdown area of this chart pattern. So the pattern that I'm referencing is this, what I call an ascending broadening price pattern. So if I connect these lows and that hits that low right there, and I connect these highs, it creates this pattern called an ascending broadening price pattern. So throughout the pattern, prices are ascending. It begins life in the pattern very narrow, and then it widens or broadens out at the top. So now in my mind, I feel that we're going to come and just retest this area around the 4,200 level. So last week we fell out of, here, and then we had this key reversal, made a new low, closed on the high. So that indicates that there's some near-term support. And I think that that support could extend back to the 4,200. But a lot of people will start getting excited that, the bull rally's back on, and, I think that that'll be just a trap. So to me, I'm looking at this double top, I'm looking at this ascending broadening, and I think we could rally right here. Now, again, I then see what the market does. Does the market truly come here and start resisting? Or, am I wrong? Does it just start forming a new? So what I do is exactly this. I put a boundary around prices so I can understand it. So right now, my thesis is that we have this double top, we have this ascending broadening, we broke out of both of these. And so I think we're going to go lower. But again, what I think doesn't really matter. What I now do is I just pull back and I see what does the market do. So, if the market comes here and does this, then that's really what I'm expecting. And, I start off with a certain, expectation based on the analysis. But what I've learned over many years of, making a lot of mistakes is that, the worst thing to do is have an absolute view, a locked in view of what you think the market's going to do, because, that creates an ego, and then behind an ego is a need to defend that ego. And that's when you get into all kinds of troubles. So what I try and do is just surrender to the will of the market and say, okay, if it goes here, does it give me some kind of indication that we're going to roll? Or, if it keeps going, then what this says to me is that this becomes a busted pattern. So sometimes we see patterns in the market and then the market doesn't respect it. So then it just really effectively busts the implication of that. So, now I have, my scenarios where I think it's going to go like this. But if it starts going like that, then, I'll get on the other side of the trade. So the key to this game is to be completely objective, not listen to the news, not listen to opinions, watch what the market is telling you. And right now, I think the market is telling me that it's going to come back to 3,600. Now, I'm a little worried about this because this worked so well with the IGV that I'm thinking, is this still going to work again? What I mean was I had the same kind of analysis on this technology ETF that I shared with you yesterday. And it did exactly what I told our members it was going to do back in November. So the problem with this is that it's already fulfilled its objective. So I can see that we're going to have a relief rally in the market. So what I showed you yesterday was we had this head and shoulders bear price pattern. And then we also had this ascending broadening price pattern right here. And it broke both the neckline of the head and shoulders and the lower end of this ascending right there at 370. And when it broke there, I said this thing was going to go between 260 and 270. And last week it went to 256. And again, it was because I just saw that it had to come back to the beginning of this pattern. So now it's basically fulfilled that. And now we have this key reversal here. Last week we made a new low, close at the high, which tells me now that there's some support in this area. We basically fulfilled the objective of this pattern. And so now, this thing could easily go back to, 300 before we pull back again. So that's why I think, we're still going to have, this, what I call a dead cat bounce or an extension of this bounce. And, but I still think that, we've got lower to go, but maybe not. Maybe this is the low. I mean, this kind of came back. It did exactly what I thought it was going to do. And now we could just be bumping and grinding for a while, trying to find a low. So this is what I do. I just look at levels on all of these markets and try and figure out where's the best way to construct a risk reward outcome. Now, one of the trades that I'm looking at tonight, and I should point out, and I'll do that now. So this is a crazy pair. Just put on some more time here, called the pound versus New Zealand dollar. It's an exotic pair that's kind of gone very sideways over the years, but buried in all this is, price pattern that has been kind of guiding me for the last 5 years. So this is, you'll notice, a weekly chart going back at least 5 or 6 years. This is in contrast to a lot of charts that, people are using, short-term charts where they're looking at an hour, 15 minutes, 4 hour, whatever it is. If you're looking at that, then all you see is the last 5 or 6 days. I'm looking at a chart that shows me what's happened over the last 5 or 6 years. And then once I kind of understand something from a global view, then I will drill in and find the time frame that looks like this is going to set up for over a shorter duration. But first off, what I should point out is that this is what we call a clean or a naked chart, right? We call it a naked chart because there's nothing on it except price and time. There's no volume here. There's no moving average. There's no Bollinger Band. There's no MACD. There's nothing on this chart. This is just what we call a clean chart. And so I don't look at these lagging indicators. To me, looking at an indicator is, like driving, looking in the rearview mirror. An indicator is based on prior history. What the market is trying to tell us is what's happening in the future. I'm interested in what's happening in the future. And to me, the market tells you what's going to happen in the future through a combination of price patterns and price action and trends over time. So, this looks like just a crazy sideways nothing market. But to my mind, this has been a bit of a bull stealth bull market ever since late 2016, early 2017, when I spotted this double bottom, which is exactly what it sounds like. Makes one low, bounces, retests the low, and then comes through the neckline, and that effectively confirms that this is a bottom. And if a market is bottomed, then over time, we can expect it to go higher. But that being said, this has been a difficult cat to try and get hold of. And then right in this time frame, we have a rounding bottom. And so you can see that that area of resistance now became a new level of support. So the 180 became a new level. Now 185 became the next level. And we've been kind of staircasing higher. And so now you can see in this time frame, you've got an emerging double bottom. Could go anywhere right now. So once I kind of feel okay, I feel like I can see on the weekly, the long-term trend, the pattern, then I'll dig in and take a closer look and see what's going on the daily chart. Sorry, let me just kind of straighten this out so we can see it. Okay, that's about see if I can just get one. No. So, this chart's kind of all over the place. And, I'm always looking for what I call the governing price pattern. And this one, it's a little bit of a pick 'em, because on one sense, you see this very clear double top. But you can see that pattern was a top, and it did its job. This thing dropped from 202 all the way to 187. You could have taken 1,500 pips straight south from that pattern. But now the market has kind of gotten back into the weekly cadence and looks like it's kind of grabbing a foothold. I see very subtly buried here this bottom. And then you kind of have this inverted head and shoulders, maybe. And now we're at the top of a reverse triangle. So the market puts on all kinds of ways to look at things. So now you're at the peak of this thing. So either that's going to be it, and we're dropped back, or consistent with the weekly, I think that we could continue going north out of this bottoming pattern. So this one is very subtle, but it's also kind of a good indication of how you can kind of play, how you can suss out these moves. And so basically, I think we're about to break out of this triangle. This is really just a neutral triangle. It's, it could, break down or it can continue. So it's what we call a neutral pattern. And so this is where basically you test it out. I'm going to send out an email tonight advising our members to put a buy stop right above this high. So you can see that today's day was like a combination, like a reversal and inside bar. It kind of snuck a little bit outside yesterday's range by just a hair, but it was mostly within the range of yesterday. And then it also really reversed today too. Went to a low and it closed on the high of the day. So, I'm just concluding that the energy is thrusting to the upside. So now, again, I want to confirm. I want the market to confirm what I'm looking at. So what I'm going to do is put in a sell stop here at, I think, the high around 196.77, probably about 40 pips higher than here. So, if the next session opens and goes straight down, no harm, no foul, I wasn't put in. Now, this is also another way where you don't have to sit in front of your computer screen, till your eyes glaze over in the middle of the night, waiting for some kind of, magic signal on a 15-minute chart. So, we could start going lower here, through the night, and maybe 3 in the morning, this thing comes back up and automatically puts me into this trade. So this is really a set and forget approach, where you're not watching for hours trying to figure out where's this thing going to go. I'm just going to put a buy stop here. And then, I'm saying to myself, if I get filled, I want it to continue going higher. What I don't want it to do is go higher. And at some point, if it comes through, yesterday's close and far enough, now it becomes like a key reversal the other way. And so, I'm going to sneak a stop loss. Now you can see that the ranges on the pound New Zealand are huge. These are 200-300 pips every day. So if you put your stop too close, you could just get winged out of here and then it goes. So I try and set my, stop loss far enough back. And frankly, the stop loss really should be under these lows, which is about 270 pips away. And you go, well, how can I put a 270 pip stop? Well, if you trade with your normal lot size, you can't do that. But, if you, ratchet down and take a small position, you can. So the biggest thing that I get from most people when they see this, that I'm trying to take out a piece of the middle of a 1,500 pip move like this. 300, 500, 700 pips. I called this move right here where I saw this inverted head and shoulders and rode this all the way up and made an enormous amount in the middle. So this is what I'm trying to do, is take 300, 400, 500 pips out of an individual trade. Now, I guarantee most of you on here have never done that because your approach is not geared to do that. There's nothing wrong with you. It's just most of the industry is geared, on some kind of short-term mechanical expert advisor, BS trading method. And my thing is, unless you take out the bigger moves, you can't be consistently profitable because you will take losses. You will take losses. Everybody takes losses. But if you take these big moves, then they make up for all the losses. And that's how you become consistently profitable. So I'm always looking for setups that are going to extend to big moves. I think this should go back to these highs and possibly well north of that. So my expectation is if I get in 197, I could make 3, 5, 7, 900 pips on this trade. And I would look to start building a position as this thing gets going. So, I'm going to, if you expect to make 700 pips here, you can't expect to put a 30 pip stop loss. It just doesn't work that way. So you got to give this thing room to kind of roam, to get going if it's going to do that. Now, if it's going to reverse, then you're going to get taken out and, oh, well, end of the story. So, I would put a stop loss at least, I don't know, somewhere 150 pips south of this. So let's just say we're going to take a 180 pips stop loss on this trade. And then I'm going to show you how you can do that and not risk a lot of money. So this is how you can participate in the bigger trades and stay in for the bigger trades. So this is what's called a position size calculator. I'm going to put this in the chat box so you don't have to scribble it down. And Dwight, if you want to put it on YouTube, this is what we call a position size calculator, because that's exactly what it's going to do. It's going to tell you how big a position you can have for a designated risk. Now, I always say that you shouldn't take more than 0.5% or 1% risk on any given trade, especially if you're starting out. If you take 0.5% risk on a trade, you could have 10 bad trades in a row, and you're still only down 5%. So it's entirely possible. I could have 10 bad trades in a row, and then my 11th trade, I could make 20% on that. So now I've had 11 trades, 10 of them bad, and now I'm up 15%. So it doesn't matter how many wins you have. That's a myth in this industry. People will ask me, well, what's your winning percentage? And if I told them, well, it's 88%, they say, well, that's great. You must be a really good trader. That's bollocks, because I could have 88% very small winners where I'm taking 7 pip wins all the time. And then, I do that well. And then all of a sudden I get smacked for a 200 pip loss. And now I'm wiped out, even though, I had 88% of my trades winning. So I look for the quality of the wins versus the quality of the losses, right? This is the quality versus quantity. So the way to figure this out is you come here, you look for the pound New Zealand. Where's this thing? Here it is, right there. So you click, I had it. There it is down there. And you can use this calculator for any major currency around the world. Now, there are better currency calculators out there. This one used to be good, and then it got, they changed it and it became too complicated. But I'm just going to share with you how to do this, and then you can look for other calculators or use this one. So, let's say you have whatever, small account size, $3,000, and you want to risk 0.5% on this pound New Zealand trade. 0.5%, so expressed as 0.50. So let's say our stop loss is 187 pips, and so this doesn't matter. The size of your stop loss doesn't matter because you're designating what kind of risk you're going to take on this trade, right? So it could be 87 pips, it could be 187 pips, it could be 387 pips. It doesn't matter. If you're whacked out on this, you're only going to risk 0.5% of your equity. So now this is where it gets a little complicated. I don't know why they changed this. So it says one lot equals 100,000 units. Now, 100,000 units is a normal lot. So most people are trading with mini lots or micro lots. So that's 1/10 of that. So I'm going to express as 0.10, and then you hit calculate. And this tells you that you can do 0.13 mini lots and, take a chance on this pound New Zealand trade. You get whacked out for 187 pips. Guess what? You've only lost $15 of your $3,000 and you live to fight another day. So this game is all about money management and risk control. And most people unknowingly are taking too much risk per trade, where either you get stopped out in a lot of trades. If you think, well, I'm going to be a good boy and just, put a 10 pip stop loss or 15 pip, you could die a death of 1,000 paper cuts. You could, bleed to death just getting stopped out all the time. So I prefer to look for the bigger trades, put a wider stop loss, look for bigger moves, right? So you're trading less, you're looking for more high quality trades, but this is how you make money over time. So I'm going to share with you a position size calculator. We've actually developed this for stocks. I'm going to put this also in the chat box. So if you're trading stocks, whether you're long or you're short, you put your account size here, $4,000, your dollar risk, $100. So your percentage is, call it 1%. And your entry price is, whatever, $120. And your stop price is $114. You can short 7 shares. So this tells you how, if you go long, same kind of thing. You have a $5,000 account. You buy a stock for $40. Your entry price is 42. Your stop price is 37. You could buy 400 shares. So Arthur says, how does it operate without knowing what stock? It doesn't matter what the stock is. What matters is your entry price. So, if you're looking at whatever, Beyond Meat, or if you're looking at whatever, $125 stock, and now your stop price is, 1112, doesn't matter what you could buy 153. So it's a very dynamic calculator. Doesn't matter what the stock is. What you're doing is you're putting in your entry price and your stop price. And then based on, your risk parameters, this will give you. Mark says, how do I register with you? You can contact our support team. You should get an email after this webinar series, but if you don't want to wait, you want to contact our team, I'm going to put support at thepatterntrader.com, and they can kind of give you a generalized feeling of what we have. A website. What really we're going to offer you after this is not offered on our website. Access to my elite program. This is everything that I do, including all of our early morning sessions where I give you an orientation to the opening price and what's going on in the market and things of that nature. No, it's thepatterntrader.com, Mark, not patterntrader.com, thepatterntrader.com. You're welcome. Thank you for asking. So that's what I'm looking at tomorrow. I'm short gold. I'm looking at going long pound New Zealand. I've already personally got a bit of pound New Zealand. I jumped the gun here, started buying some yesterday or thereabouts, and I'm going to add to my trade on a breakout. And I sold some silver today and I'm short gold. So I'll just put these up together. I think I analyzed gold yesterday. I'll just put these up together. So you know, you can just, to me, when I open up a chart, I want something to just jump out at me and say, you know, here's, you know, what I think's going on here. So maybe I should look at gold just on its own, because I see something here that I don't see on silver. And it really would, you know, is a signal going into the next session. So let me just get rid of this. So, you know, I think I analyzed this yesterday on the weekly chart. I've been looking at gold through the same prism that I did the IGV. Just amazing how these things kind of start conforming to similar chart patterns. But be that as it may, it just tells me, gives me a lot of information. So this is just a long-term ascending, broadening triangle. So if you go through all of these lows, you can see how this thing has been hugging these lows for a long time. And whoops, we started to just break this recently. So now this could be a bear trap. You know, you chase here and could go back up. So I just kind of look at these boundaries. I try and put boundaries, because if you just look at prices like this and go, well, this is a pick 'em. It looks like a toss 'em. Could go up, could go down. So then what I try and do is look within that and see, okay, what I think are the governing price patterns. So here was, you know, buried in this thing here, like a double bottom, which indicated that there was, you know, support here and that there was going to be a move higher. But now I think that that move's been kind of accomplished, and now we hit this, you know, kind of big double top. This won't be confirmed until we kind of break under 1700. And then that whole thing will be a top. But I think that it's reasonable to start concluding that that could be what's you know, in our future. So you have kind of this big double top, and then you have this, you know, interim top where you kind of made this top right here. And I started, you know, telling our members to start shorting here at $1,919, and then last week at $1,827. And I think that, you know, it's setting up where you could take it for a spin tonight. So this is a free webinar, and hopefully you might be able to make some money out of it. So this is XAUUSD, which is the ticker symbol for spot gold. So now once I kind of feel like I know what's going on the weekly level, then I drill it down to the daily. And, you know, here it's more prominent, where I see this double top much more prominently. And then it cut through the neckline here, which is simply a line drawn through the pattern. And you can see, you know, sometimes you barrel through these things, you retest, you know, this breakout area. And once you've kind of retested enough time, once it broke this low, then I know, then it's game on. Now this is real. This tells me that this is a real pattern. You know, we see patterns all the time, looks like a double top, but it's not, because it needs to confirm. And so now this to me is what I call the governing pattern. This is going to govern or dictate how this market goes forward. Now it could, you know, go there, then it could go there, it could go there. So it could do a million things, but I'll know that, you know, if it comes here and then has a huge up rally, I'm not going to get suckered into that. To me, this is what's going to be governing, and I'm going to be looking to short this thing. So, you know, now once I kind of, you know, see the phase of the condition, so we're in a downtrend, we've got a bear price pattern, chart pattern, and now I'm going to look for my insurance day bar in the form of a key reversal or an inside day bar. Well, right here, today, you have a key reversal. Made a new high earlier in the day. By the end of the session, you close right on the low. So now, the way I would handle this into the next session, and this is, you know, where you got to be a little bit careful, but I don't want to kind of get too into the weeds here. Where if something closes on the absolute low, what I actually want to see is, you know, the thing go higher. I want the energy to build and then hit me. I don't want it just to, you know, put a sell stop here, have it close on the low, have it, then open on the low in the next session, hit me, and then go back the other way. So there's a bit of a, subtlety in it, but for, argument's sake, this is how I would do it. I put a sell stop under the low here. So it looks like closed around 18.15. I don't know what the low was today. The low was 18.12, about 18.13. So we, right on the low here. So I put a little bit under the low, call it 18.10, what have you. I'd sell it here at 1810 on a sell stop. And then I would put my stop loss, somewhere above here. And risk that 0.5%. So whatever this, so this is a $30 move. Whatever your account size is, say, hey, I want to risk, 0.5% on this trade. If your account size is $3,000, 0.5% is what? 150 bucks? My math's terrible. And then just divide 30 into 150, and that's how many lots you can do. So I don't know if that makes sense to you guys. And this is how I look to step my way into it. And then if it starts breaking and going lower, and then I see another reversal down here, depending on what it looks like, I might start adding to my position. And this is how you take advantage of a big move in the market. I mean, I got short here at 1900 and I'm still in it. It's sitting down here. I'm not looking to take profits. I've got a monster amount of money that I'm making on this position, but I look at the trade. Is the trade still intact? Why would I get out where there's no trade that said there's nothing that suggests that we're going to do that. So, in fact, just the opposite. This weekly is setting up so that we're on the cusp of this ascending broadening thing, and if this thing does crack open, this is going to be just a huge move lower. So you can see we, just started to break. You can get some false breakouts, but if this starts to break, this thing's going to come down like it's just got a lot of stuff to get through. There's a lot of support right here, 1750, 1700. But if we start, making our way through this thing, then this thing could really cave in quickly. So, a lot of people ask me, what do I think about these other charts and what have you? Really, what I want to do is just reinforce, my analysis. And, I do this on any chart. So this is, not a popular hits where I'm going to go through 1,000 charts. What I'm trying to do is impart a certain methodology. So, invite you to. So Zoom says, what leverage do you recommend? So I just use leverage in terms of percent of an account risk. So, if my account is $3,000 and I'm going to risk 0.5% on a trade, what does that equate to? What is that, 150 bucks? And then I just divide whatever that risk is into 150 bucks, and then that gives me my trade size. So I think it's much easier for people to think in terms of risk. So I'm looking to risk 0.5%. Now, the stop loss parameters could be different for every pair. So if you have a pound New Zealand and your risk is 150 pips, then you can do one lot. So is it 15? Is 0.5% 15? Yeah, it probably is. That's 5%. Yeah, so I'm wrong. I told you my math is terrible. Yeah, so 1% is 300. 0.5% is, so yeah, 15. Yeah, 1% is 30. Yeah, 300 is 10%. So 1% is 30. So 0.5% is 15. Sorry. It's late in the day. So that's how you'd figure out how much risk you need to take on that trade. And then you just divide your risk, and it just tells you, if you were, going to buy shares, then, I've given you the calculators to make those calculations. Justin said, I joined the Academy online, Pattern Trade Economy. I want to know more about the elite program and the boiler room. Justin, like I said, you could either jump the line and go and call support, at the Pattern Trader, or after this 4-day webinar series, you're going to get an email inviting you to register for the elite series in the boiler room. But if you're interested, just go ahead and message our support team, and they'll give you the guidance. So Theo says 0.5% per trade on how many trades? That's a good question. I look at each trade as kind of a random event. So, if you've got a batch of trades on, if you've got 4 trades on equaling, 0.5%, then effectively you're risking 2% of your portfolio, right? So that's not too bad. I can't really hold this many trades in my head. What I really do is try and hone in on some trade that I really like, that I can really understand the risk reward parameters. And then I just zone in on that. So, there are dozens and dozens of trades out there. We could be trading everything. I just try and hone in on what I think is a good risk reward opportunity. What I mean by that is where you're taking a small amount of risk for a huge outcome. So when I got in here at $1,900, I saw this double top here. And so to me, this whole thing looked like a huge resistance. So I figured if I got in here, then my risk was, in my mind, I was risking 20, 30 bucks, whatever, for what could be hundreds of dollars. So there are certain special opportunities where I will just load up, where the risk becomes very small. And what happens is over time, the market starts de-risking itself, meaning that the more, I don't know why these things aren't showing up. There they are. The more work something does, the more mature it is. So this has gone back and forward in this kind of sawtooth thing. Ultimately, this thing will, resolve itself. So, it's gone sideways for, whatever, a year and a half. So then it starts de-risking itself. It starts just by virtue of time and then, certain patterns. Then the risk reward becomes more identifiable and much more pronounced. If I can get in here and this thing does break this thing, this thing could be down here. So I could be looking at whatever, a small finite risk here, whatever this was, in exchange for that. And that's what I look for. They don't come along every day or every week. This thing has taken a year and a half of just sawtooth grinding back and forth. But I do believe once it resolves itself, you could have a flush. And so this is really what I'm looking for, is identify breakouts and get a piece of the middle of a big move. I'm not looking to drive myself crazy, trading 10 times a day, for a dollar in and dollar out. That's not what I'm looking to do. I'm looking for a move. Now you can see that, in between this, I took all kinds of moves out of this thing. It doesn't look like it, but, I was already up to here projecting that this was, and so at this key reversal right here, I started getting short there, then I got short there, and I rode this all the way there, and I made several $100,000 just on that move. So I will see patterns within, these sawtooth patterns, and that's what I'm looking for, are these bigger moves. You could buy a put or a call in GLD, yes. When to take profit, trailing stops. So, that is always a complicated discussion, only because it really depends, A, where you get in a trade, what the maturity of that trade is, what the objective is. So I happen to think that, first off, where I got in here, I like to get the horse right as it's coming out of the barn. So I like to see an emerging pattern, see it confirm like this, and then get it there and then start adding. I'll start adding, every time this thing, goes, I will look to add and build a position. And then I would get out of this thing the same way. So my objective at this point right here, and I've got this trade somewhere on my, so you can see right here, this was this ascending broadening. So when I put this on, and I don't like just to talk about it, let me see if I can find it really quick. I don't know why this is my slider has disappeared here. Sorry about this. Anyhow, when I told our members to go short here, I said my objective was $1,700. I wrote my email. My objective for, when I shorted this trade at whatever it was, 1877, was 1,700. I actually got out on a take profit at 1687, because this is exactly where this lined up. And so I took this trade exactly there. So what, so my take profit was at an appointed destination where there was support, and then it coincided with a pattern that suggested now that this thing was going to go the other way. So, my objectives for each trade are going to show, I got in here, then I added here. And of course, my take profit from this is going to be different than the take profit from that, or the amount. So it depends where you get in on the trade, and, where, the objective is. So every trade has its own profile, its own setup. So the risk reward dynamics, change. But, it all starts with recognizing. So, and I showed you how I would put the stop loss on gold, for tonight's trade. I would just put it above today's high. And I would look for, what I try and do on the take profits is that when I send out my email, I always put my take profit way away from where the prices are. So if I was going to tell you to, take this trade, I'd say, sell this at, 1,810, put a stop loss at, 1,840. So now you've got a $30 risk. And then I would say, put your, take profit at 1,700. Now, I don't expect that take profit to get hit tomorrow. And then what I do is I try and see, is the market now confirming what I'm looking at? Obviously, if the market comes here, puts in a, thing and starts going the other way, then I might just get out of that trade really quickly. On the other hand, if I get in this thing and it starts dying tomorrow, and then the next day, and then it starts coming down here, and then it starts hurtling toward this $1,700 price thing, then I might just, take this take profit out. I don't want to stop it from making me more money if it's going to go through here. So I just basically put my take profit somewhere, arbitrarily out of the way. And then I want to watch and see how this thing greets my analysis. How does it greet the trade? Does it hit me here? Come, now if I've got two maybe key reversals in the same area, I might want to get out of the way of that. I'm just giving you kind of an example. But on the other hand, if it starts kind of hurtling out of here, then I might want to give it some more room. And, I'll just keep moving that take profit lower and lower. So, I think that this is the beginning of something big. I think this is telling me that this is a big, like huge distribution level, that, basically this is net selling, and that over time, this thing's going to break down and go lower. So once I have a vision of what, I think something is, then I set my lot size, my position size, my stop loss, my take profit, depending on what I'm looking at for that particular trade. Sometimes I might be looking at just a counter trend trade. Well, like I said, I think you're going to get a dead cat bounce in this market. So I might trade some stock for a few bucks on the upside before that big trend, downside starts kicking in again. Wakar says, do you believe in mechanical trading? I absolutely do not. Especially not at, the retail level. Maybe, if you go to Goldman Sachs and you get access to their algorithms, maybe. But, if you think you can buy some robot off the internet for $600 and it's going to trade for you profitably ad infinitum and you could just kick back and have a beer, that doesn't sound like reasonable to me. If you could buy something like that for $600, I guarantee you JP Morgan and Goldman Sachs would pay tens of millions of dollars for such an algorithm. So no, I don't believe it. I believe the human mind is the sharpest weapon. And so, I don't think bots or algorithms can anticipate a change in market conditions. They can't adjust to that. So they may go for 3 months or 6 months and you're making money and you're all complacent. And then, in one sequence, you're wiped out. So no, I believe in the power of the human mind and the human imagination. And, this is what I see. And so this is what my imagination tells me. XAG is spot silver, and XAU is spot gold, saying. Steve says, I write software, you cannot replicate the mind. Thanks, John, I appreciate it. Appreciate that, John. Kayuta says, thanks for your wonderful coaching. You've been a great mentor. Your program is really educative. Always grateful to have known you. Thank you so much. So thank you, Kayuta, if I'm pronouncing it right. I'm sorry if I'm not. Thanks, Arthur. I appreciate it. So that's basically what I wanted to share with you today. It's just over and over again, whatever we're looking at, I look at what is the phase of the condition, and, that changes, right? So, this was an uptrend. And then before, a trend changes, it always is preceded by a recognizable pattern. So now this is what's called a reversal pattern, a double top. So now it throws the market into reverse. So now this is the phase or the condition of the market. So, I'm always looking for what is the direction. And in this case, it's changing and looking like it's now gone from 2100 all the way to 1800. So we're, certainly in a short-term downtrend, which could turn into a long-term. And then I'm always looking to surrender to the direction that's indicated by the condition or the chart pattern. And then I dial it down and look for a certain bar where I find a key reversal. Made a new high, close on the low. Made a new high, close on the low. You could have shorted under each one of these, put your stop there, and now you're in this market. Now you're making money and money and money. And, my point is, why would you get out of this market? There's nothing to kind of show you that we're going back up here. So I will stay in the market as long as it will have me. 3 days, 3 weeks, 3 months. I was in a pound New Zealand trade for 13 months. from 2017 to whatever, the middle of 2018. So I will stay in a trade. And so this is a trade that, I think you want to stay in. It's, going to have a lot of bumps and grinds, a lot of, these as it, gets through these areas. It's not going to be easy, but to me, this is my guide, right? So I always look for the trading for dummies. This is my cheat sheet. So this tells me what's going on in this market. This is just, a dead cat bounce. You're going to have plenty of those. But if you understand what's controlling the market, then, and sometimes it's easier said than done. I mean, like I said, pound New Zealand has been, in a stealth up market, but there have been whole periods of time where, it's going down. And I will do counter trend trades. I mean, so, if gold gets down here to 1720 and I see, like a short-term bottom, I might ride that back up for, $50 the other way. If I see that there's, a way to get on the other side. So I just look at these waves, long-term, short-term, and try and take a piece out of the middle, right? So even if I got in here, I got in at 1900, even if I get out here. So I've taken out a nice piece of that thing, but I think there's more left on the table on this one. So I'm still staying in this trade. At some point, I might start taking pieces of that trade off, but this looks like it's just starting to crack. So it starts getting through these, these levels. This thing's going to crack wide open. So DM says, I thought it was best not to trade against the trend. It depends what trend you're talking about, and it depends, what's the duration. So there's no set standard. So I'm just looking for a move, whether that move is 150 pips or 700 pips. So thanks, Taz. I appreciate it. Deborah, thank you. How can we learn to read the charts as you do? I mean, which program do I go? So there are thousands of books. What I will say is that what it took me a long time to figure out is that the market will throw you all kinds of patterns, right? So, if we looked at, so let me just take this out. It won't let me do that. All right, so just for the sake of argument, let's say you didn't see any more history, but you were right up here. You could have said, well, maybe this is a double top, right? So you always see these patterns. And so the market always, lays these traps in a way. And so it's probably more important to recognize the traps than it is the opportunities. So if this was a pattern, you'd say that this was roughly the neckline. So you can see how sometimes the market looks like it's doing something. It looks like it's a top, it's coming, but it stops short of here and then starts going. And this is when, I say this starts busting the implications of this. So this looked like a double top, but this kind of starting to go back the other way is starting to negate that. So if I even thought that, well, maybe this is a top, then this market action starts telling me. So what I do is I draw my structure, and I might have at this time said, okay, this is a top, and what have you. But then if I start seeing the market start doing something outside my expectation, outside what, so if my thinking this was a top, this is what it should have done. A top should be a top. But if the market, doesn't confirm it and starts going the other way, so you can look at these charts in a textbook and see a perfect double top like this, and it goes like that. And now, when I was young, I would start seeing these things and bet the farm on this. And then, if it started going the other way, I'd get really arrogant and say, well, this is double top, and I'd start shorting more here and then get taken out to the park. So these patterns are very dynamic and fluid. And so the only way to know if they're real is if the market confirms them. But sometimes when you get a combination of the patterns and the price action, then it starts telling you that this is real. So to me, that's what Tesla is. That's why I don't believe this uptrend. You could have another $50 higher, but I don't believe that it's really going to extend. So this was a double top, but I knew it also by virtue of the action within the, so you can see right here at the high, it made a new high that day and closed on the low. And then at this second top, it made a new high and closed on the low. And then this is where you have a key reversal and an inside bar, right? So all you had to do was put a sell stop right there, pending order, and you were triggered into a $200 move, $300 move. But so the markets, show you these patterns all over the place. And then I look at how things close relative to the high and low. So, here was kind of an interim double bottom where you kind of got into this area where all of these made a new low, closed on the high, made a new low. So these started to tell you that this was an area where, you got to be careful. And then it went on for another ride. So this is why I say, and so this is what I call a counter trend trade. So I took this thing long, even though I believed the long term was going up, because I thought there would be a move higher. And I took a piece out of the middle of that move. So, if this thing goes higher, I'm going to be looking for this thing to come back down. So the market is a dynamic, fluid place, and you kind of just have to, the market does tell you a story. It does. It is a dynamic thing, and it's always trying to sucker you in, right, to do the wrong thing. The market's like I said yesterday, market's like a magician. Doesn't just come out on stage and pull a rabbit out of the hat and say, okay, we're topped out at 1,200. We're going to go straight to 500. It's going to give you these counter trend trades and make you rethink your, think your assessments. But to me, this is why I always try and look at what I believe are, the governing patterns. And so I believe that these are going to govern the direction. So this thing can have all its fun. It can do all kinds of stuff, but I do believe that we're going to go much lower. But we'll see. If the market does start going like this, then I can't say, well, I'm right and you're wrong. I'll get back on the other side of this thing. But, I don't think so. Do you see Tesla having short-term dead cat bounce given it could? So, we're trading right at these lows, right? So you're right in this support zone. And the last time, you bounced this much. So this time you might bounce that much. So you could. I mean, there is this kind of, just, I don't think this is going to extend very far. I don't. But what I think doesn't matter. So, the way I would handle it, instead of trying to think where it's going to go and where it's going to stop and where it might reverse, just stick an order in here and let the market do all the work for you. So you might miss 40 bucks. It doesn't matter. If this thing's going to 500, as I think it will, I think it could go to be 300. So if you miss 40 bucks, so what? Let it go up. And then, if it hits you here, it's probably going to, keep going. So this is what I do, is I play around and I put certain orders strategically in the market. And if they don't get me, then I love that. I love being wrong and not being hurt. So I do think it's going to bounce, but I don't know how high. Are the replays available for us to watch later? I think they are, but again, message our support team if you want a replay at thepatterntrader.com. All right, everybody. I hope you have a great trading day tomorrow. Stay safe. These, moves are volatile. I think we've still got probably a move to 4,200 on the S&P. So probably still some gas left in the tank, but I don't think the down move's over. But, it doesn't matter what I think. I just wait for the markets to give me a risk reward that I can understand. Doesn't matter where you think the markets are going or what have you. It's all about the setup and the risk reward on that setup. All right, guys, have a great evening. Thanks, Dwight.
All right, Mark.
Thanks. Bye-bye.